Welcome to the More Time, More Money and More Wealth mini podcast for business owners, brought to you by Wow Advisors Group. This podcast is dedicated to business owners who would like to work smarter and not harder, earn significantly more income and create astonishing wealth. Now, let me introduce you to our host today, Hitesh Mohanlal.
Hello, it's Hitesh Mohanlal here, and as that introduction just said to you, I am a specialist business advisor that helps business owners reduce the hours they work in their business, makes the business more efficient so that more income is made, and then we try and build that extra income and convert that into exceptional wealth. And like all these things, you've got to practice what you preach. So myself, I basically work about 3 days a week, not because I have to, but because I love what I do. I probably take anywhere between 12 and 16 annual weeks leave from my business. And as I said, I have generated enough outside wealth that I actually do not need to work anymore. But anyway, the whole idea of the podcast is to help you do the same thing. And the next topic will follow shortly. Thank you. Welcome to episode 4 of the More Money, More Time, More Wealth podcast for business owners. And today is about Donald Trump and what is he doing to my share portfolio. Now, I don't know about you, but if you've been listening to the media or you've been keeping your eye on your own share portfolio, you will know that the last couple of months have not exactly been kind to your share portfolio. And specifically on Monday, I had a look after many, many days of just negative trading. And I just looked at it and I was a bit stunned because I got hit big time. And I'm pretty sure you have been hit too. So what's really going on? And this podcast is really going to be talking about what is happening with Donald Trump and his tariffs, what's happening in the share market, what does Australia's outlook look like, and more importantly, what should you be doing or thinking about in your share portfolio if you have one? All right. So first of all, let's just take this into context, okay? The media loves a crisis. And because crisis sells, okay? If you see lots of nice and fuzzy-duzzy things, then the media doesn't sell as much and it can't advertise as much. But a crisis gets everybody wanting to read about it. And what tends to happen with the stock market is the media tends to blow it out of proportion every single time. What history has shown us is, yes, the stock market will drop and it goes up and, it's very volatile. But over a longer period of time, history says that the market generally goes up. And if you look at what's happened in the last 100 years, so there's a lovely graph that I have in my book, which is the passport to real wealth and financial freedom for business owners. There's a graph in there in chapter 7, I think, which just shows you what's happened in the last 120 odd years. We've gone through World War I, we've gone through World War II, we've had the Vietnam War, we've had the oil crisis, we've had several recessions. We had 9/11, we had the total tech collapse, or the technology sector collapse. Then we had the global financial crisis and we've had COVID-19. And yet at the end of it, we all came out of it. So yes, this is a bit of a, if you like, a crisis. But over time, I believe it's something that will settle and we will get over. So don't get excited about what's happened in the media. Don't necessarily look at it and say, oh my God, the world is ending. Because from a financial perspective, that's not strictly true. So let's go on to the next topic, top subject. Trump's tariff. What the hell is all that about? And why is he doing what he is doing? Okay. So for many of you, you think he's gone nuts. He's gone mad. He's absolutely bonkers. Because what he's done is he's done all kinds of things. He's threatened to ruin Russia. He wants to take over Greenland and Canada. and he's looking at Ukraine and he wants to solve that problem. And at the same time, he wants to put China in its place. And he wants to put tariffs against every single country that he can think of in the hope that it will make America great again. And it just seems crazy. Yet there is some logic behind what he is doing and what he is thinking. Because for many, many years, manufacturing has actually been quite weak in the USA, and a lot of that manufacturing has come out of the USA and gone elsewhere, specifically China, but it has moved to other countries as well, including Mexico, China, UK, Europe, etc. Okay. He also believes that if these tariffs come into place, then a lot of people will, or external companies will start investing in America again, which will create jobs, which will then make it manufacturingly stronger. Okay. I think he also thinks that the dollar is too high. This is something that I picked up from a Morgan stockbrokers. They had a recent update on the markets and to its investors, and one of the things that came out of it was the American hierarchy think that the US dollar is too high, and if it's too high, that does not help its manufacturing and its ability to export, so it would like the dollar to fall. There is no doubt that America has a massive trade deficit, and it has a massive debt problem. At the moment, it is sitting at $36 trillion. I have no idea how many zeros that is, but I am told it is quite a lot. And that means the debt is quite a lot, and they have to do something about it. It is not something that is sustainable. And finally, what he's done is he's reduced the corporate tax rate in the US, and he has to pay for it, and he doesn't know how to pay for it. So what he's saying is, if I charge everybody else who puts their goods into the USA, I can then reduce the corporate tax rate, which will then encourage US businesses to invest more in their business. Now, one of the things that I'll tell you about tariffs is that a whole tariff system, people don't realize it's an absolute mess. Okay, you get and there's a thought process that actually there are no tariffs around in the world, but actually there are lots and lots of tariffs around in the world. And to be quite honest, the USA has a lower tariff rate than other countries. So Trump's view is, look, if you as a nation, so for example, if Australia has 10% tariffs on its vehicles, but USA only has 5%, he's saying, well, that's unfair. If you want 10% of USA's money, we want 10% of your money too. And that kind of makes sense. So he's trying to balance it out. And so to a certain extent, it does make sense. The problem is that tariffs don't always work, and they're very protectionist. And generally, history has shown that protective measures don't always work. And I'll give you an example of what I mean. Elon Musk, who is probably Trump's bestie, okay, is owner of Tesla. And he also has a space company. And now Tesla has come out and said, look, if tariffs are raised on spare parts and things that we bring into the USA, we're never going to be able to get around that because USA does not have the ability to either manufacture that or source it in the USA, and therefore we cannot do anything about it, and therefore the prices of our cars will go up. This means the USA people have to pay more for their cars, which will affect inflation. And I'm sure there are lots and lots of products like that cannot be manufactured or made in the USA. And that's just going to make more goods and services expensive in the USA, which is going to lead to more inflation, which means they do not have the ability to reduce interest rates as fast as they would like. The other thing is all of this spooks the stock market, okay? Because 1 minute he says it's 25% tariffs on Canada. The next day he wakes up and says, no, I've decided it's going to be 50%. And it's going to happen on, effectively today, which is the 2nd of April. So he's coming up with all these sort of things, and the stock market requires certainty, and all this does is it creates unnecessary uncertainty. Markets don't like it. They don't know what's going to happen. They don't know exactly how companies are going to now make money. It's causing all kinds of problems, and that makes the stock market very, very volatile. From the Morgan's update that I was listening to, they believe that this volatility period can be anywhere between 6 and 12 months, which means the next year or so is going to be quite rocky in terms of an investment. And to be quite honest, we shouldn't be surprised. We're dealing with Donald Trump, and Donald Trump, as we know, is never been one to be stable. He's always erratic. So expect the stock market to be erratic during his term. All right. So that's what's happening with markets. All right. What really is the outlook when it comes to Australia and the world? Okay. And to be quite honest, Australia is not in the most fantastic position. So if you look at the figures that the Australian government will show you, they will tell you Australia is doing really, really well. When you dive into those figures, what you're going to find is that it's not as rosy as it looks, because nobody is actually really spending money. So consumers are holding back. Okay, and that's because there's a cost of living crisis that we have. So people are being quite cautious about where and how they're spending money. Companies are not investing as much as they would normally do. So they're holding back too, especially in that mining industry side, because mining is now affected by tariffs, and it's also affected by what's going to happen in China. So if Trump increases his tariffs significantly to Australia, it will make a difference to us, but it's not going to make a dramatic difference because we don't actually export a significant amount to the USA considering our GDP. However, if Trump raises massive tariffs against China, we do have a problem because we export massively to China, and that is going to affect us. And all these companies right now are spooked. So they're not going to invest in it until they know exactly where they stand. All right. And over the last year or so, they have been quite cautious about how they are investing in their companies. So where is this growth coming from? Well, the growth is actually coming from our government. Our government is spending more and more. Okay. And again, this comes from the Morgan's presentation I was in. In 2024, government and state spending was 28% of our entire GDP. Now, to give you an idea of how much that's gone up, in 2014, the figure was 21%. So over 10 years, the government and state governments have increased their spending of GDP by 7%. Now, I don't know about you, but I haven't seen necessarily a great amount of productivity coming out of our government. But I do know more and more people have been employed and we are spending more and more, but we don't seem to be getting the productivity that's coming out of it. And what all that's showing is that Australia is growing, but it's only growing because effectively it's spending our money on basically ourselves, and we are effectively overspending. Okay, so we now also have a debt problem. We're sitting at around about $1 trillion, and what the liberal government that may come in, because we have an election coming through, and the betting guys are saying it's going to be a change of government. What they're saying is, look, we are spending too much. We would like to cut that. Whether they can or they can't, I don't know. But what I will say to you is the UK went down a very similar path. They spent a lot of money the government spent a lot of money and expanded its spending, and it's in a bit of a mess right now. So if Australia continues to go down this route where the government is spending or creating growth as opposed to individual consumers and the private sector, we will have a long-term problem. Okay. Having said that, I think Australia still has a wonderful, wonderful future if it gets its policies right. We have an abundance of natural minerals and resources. We have a adequate and probably correct level of immigration, as long as that immigration is immigrating the correct type of people. We should be okay. All right. The world global market is also looking quite good. Okay. So even though there's lots of stuff happening in the USA, there are lots of companies there that will start making more money as manufacturing does get better over there, as companies do slowly move their things over. If their debt levels are stabilized or go down, if those companies start investing, that market is going to move. It's just not going to do it straight away. Okay. Equally, in the EU, there will be some movement there. They're spending lots of money on defense, and that will feed through into their economies too. So overall, the global outlook does look decent when you consider all those factors together with possible interest rate cuts. Now, I want to make one particular comment on interest rates. There was a feeling that the rates will go down significantly this year. Based on tariffs, based on what's happening in the USA, I think rates will fall, but they may not fall as much as we would like this year. Okay, finally, what should you do? And I look at my portfolio and I think, oh my God, maybe it's time for me to get out and cash out. But generally, history shows that if you do that, you tend to lose more. So the advice that I will have given clients is, look, historically, those that have cashed out, got itchy feet, sold and left the market, do worse than those who stay and stick in the market. The Morgan's update that I was listening to pretty much said the same thing. Okay, said, look, just sit it out, let it go through the process. We've been through this many, many times. It should settle itself out. But they'll always say, hey guys, there's no guarantee. And I will say to you the same, there's no guarantee. But the way you got to look at it is, generally the market, the global economy is looking reasonably good. And it's just a matter of going through this process and allowing it to settle. Okay. So before you go around blaming Trump for all your losses, just think about it. If we were in his position, where we had such a large debt and we wanted to try and invest in things, we would probably go down a similar route too. That's the end of my podcast for this session. Thank you for listening and have a great day.